open and the actual open now coming up. So it's higher marginally and not too much, of course, not too much conviction straight off the bat, but it is up. 26,180 and 59,650 are the rates respectively on the two indices. Nifty Bank is up 0.14, mid-cap index is up 0.15, and the small-cap index will come up as well. Of course, I think we should straight away look at what the Nifty 50 heat map is indicating before we look into individual names in the broader market across the board. So it's mostly all up. Some 10, 12 names are lower, but broadly is higher. Mahindra & Mahindra, top spot, followed by Bharti Bipro and a few others as well. So 50 points to start the first of 2026. Vodafone Idea, I can see some stocks there, is up about 2.5% as well. Mangalam.
Yep, the mid-cap index is, at an index level, slight underperformer as compared to the frontline index. But again, there's nothing, awry about this. This is just early days, early trends and low volumes. But for whatever it's worth, we still have two stocks advancing for every stock which is declining. Obviously, this settles 15 minutes into trade. A couple of stocks which are doing well. NCC, out of F&O, did well yesterday, continues to do well today as well. Opened about 3% higher. We have Escorts Kubota, which is doing well as well. Vodafone Idea, after a big drubbing that we saw yesterday, it's up around 2.5%. Let's see whether it sustains those gains or not. Indus Towers is the other one, which usually follows what Vodafone has been doing. Ireda, a decent update that has come by. That's, what our team did tell us. Momentum remained healthy in the third quarter, but slowed down versus the first half. The street takes that in its stride, and the stock is actually marginally higher by about 1.5%. What's not doing particularly well, we have Delivery, which is down by about 0.5%. M&M Financial is down 0.8%. GMR Airports down 0.5% as well. Some traction on the IT space. Wipro's opened about almost 1% higher. We're seeing some traction on Eternal as well. Typically, the 31st of December is a good day for all these food delivery companies. So Eternal is higher. Let's see whether Swiggy is following suit as well. And in the broader markets, a big move is what we're seeing on Blue Dart. Remember, a couple of months ago, the company did indicate to the exchanges that effective Jan 1st, their prices stand revised higher by about 9 to 12%. And Blue Dart, because of their increased prices, that stock up around 7%. Zydus Wellness was up in near double digits in yesterday's trading session. That continues to do well. We're seeing some decline on ITC and Godfrey Phillips. The street's a little worried about what the final tax imposition on cigarettes would be from here on. So ITC is opened about 2% lower, and Godfrey Phillips is the other one, which is about 4% lower. The excise notification has come by, or the government's notification has come by on GST, being slotted at 40% imposed from 1st Feb. But how much more will be the excise imposition, and what the overall tax imposition on tobacco would be is something that still remains to be seen. These stocks opening lower, but by and large, market not particularly bad.
Oh, absolutely, and I think it's a pretty decent start. 60 points, by the way, is what you have on the index at this stage. 1,600 up and about 600 lower. That's where we are starting the day. So Kiri is up 7%, and after the 18% move yesterday that we had. I don't know if you, Mangala, mentioned Blue Dart.
Yeah.
6.5% on that one. Shelly is up. Shelly Engineering is up about 2% or so. Hindustan Copper is coming up with a 2.5% pop this morning. It's low in terms of volumes picking up, etc. Not too much coming through at this stage. S. Naren is now joining us. He's Executive Director and Chief Investment Officer at ICICI Pru AMC. Naren, good morning. Great to have you with us here. Happy New Year to you, your team at ICICI Pru, your family, and wonderful to see you.
Wishing everyone, every viewer and all of you a very, very happy, healthy and prosperous 2026.
Well, absolutely. Thanks very much, Naren. And it's been an eventful year for the ICICI Pru team as well, right? Taking the business public and expectations are high that the performance that you've delivered for your investors, unit holders, shows up for your shareholders as well now in that sense. So all the best.
Yeah, I hope that continues, and that's the wish of everyone at ICICI Pru AMC.
And you continue to stick around, right?
Yeah, that's the.
Do you?
Actually, these are not things that are discussed. I mean, we have a board, we have
Yeah.
everything. So that's, I'm sure what the board will decide will be final.
Okay, Naren, let's come to markets and first of Jan. So how can we not talk about what and not forecast has got a bad name, maybe rightly so, but just how are you thinking about the markets from here in that sense, Naren? I remember something you said in terms of I asked you, I think this was at our leadership summit. I asked you, well, what's the strategy? And you said, well, it's not as if markets are wildly cheap or anything of that sort. I'm not sure if that view has changed. You said, well, it's single stocks where other investors have gotten frustrated after a couple of years, a few years of non-performance, and then they sell out. If you have enough understanding, you go in and buy. I mean, that's the thing to do. Is that the broad strategy, Naren? Sorry to preempt you, but go on.
Yeah, actually, this is a mature bull market. This is not a initial part of the bull market. You've seen all sectors do well. You've seen all the stocks do well. And US has also got a mature bull market. Therefore, we are in that stage, where we have to do stock picking. There's nothing at this point of time which looks dirt cheap at this point of time that you can make big money at this point of time. So you have to do a lot of work to try to make money and hope it works. That is where we are at this point of time.
Where do you find risk reward favorable, even if valuations aren't dirt cheap?
Yeah. There periodically you get stocks where risk reward is favorable in different sectors. It is not isolated to one sector. And you get such ideas where you can make money. Can you double your money? Certainly not. Can you make 15 to 20%? Yes. And those kind of ideas keep coming, and you have to keep working on them across sectors, across capitalizations, across all styles. And that is what everyone in ICICI Prudential AMC is continuously working on.
Give us some direction.
Just to give a maybe. I never name stocks with you, Naren. I know you can't be stock specific, but it's public information. For example, you guys picked up through bulk deal shares in Entero recently, right? Is that? I'm just using that as an example to close the loop on my earlier question, which is okay. As you also right now said, occasionally you get things, and then you act. Is this one of those situations?
Exactly, because this is a published information, so you can look at it and you will realize that's the exact kind of thing. You will see that we have to do across sectors and across capitalizations. We are no longer saying that small cap is a no-no or something like that. We have to look at all capitalizations, micro cap, mid cap, small cap, everything, and look for ideas where stocks have corrected meaningfully and you feel that we can make money. We have to do work on those companies also. It's not that you can buy anything and everything just because it has fallen. We have to do the work also, and that's what my colleagues are engaged in across sectors.
Right, and when you speak about across sectors, the other thing that stands out is a couple of these pharmaceutical names. Again, we're speaking public information out here. There's Akums Drugs and Pharma. A few of these, mid-cap IT sort of names as well. There's Emphasis, etc. So again, are you looking across capitalizations, as you said, and is there one segment across capitalizations that offers more value than the other? Because the last year was very bad when it came to small and mid-cap performance.
So right now, yes, as you correctly said, it is big underperformers, researched and analyzed and invested. That is what it is. But essentially, it is big underperformers. So it can't be stocks which have done too well and then you get into that stock. That is not what we are looking at. We are looking at big underperformers because we are not part of the AI theme, as you know very well. So, there are so many investors who are fed up of invested in stocks which have not done well for 3 years. They invested 2-3 years back, they got no returns, then they are happy to sell out and move on. So it is big underperformers and we have to research them. So that is what we are all having to do. It's very interesting period, I would say.
Yeah.
2024 second half was a very boring period because every stock would go up. You didn't need to do research. Yeah, now it's a very interesting period because we have to look at them. We have to do the work on it. Sometimes we have to take split quick decisions. We can't even talk to the company without talking to the company. Luckily today, thanks to the very good work of the regulator and the stock exchanges, we have so much of public information which is available. Based on that, we have to do all the work and come to a conclusion and say, okay, now let's look at it and then buy it.
A split second. I mean, that's you got to decide quickly when these things come up as opportunities. You got to be ready.
Exactly. And that's what we are doing at this point of time. And I don't think as investors, we'll get some things wrong, some things right. And that is, we have to equate both the things which we get right and the things which we get wrong. And hope everything, on an average, we get more number of things right than the number of things we get wrong.
Yeah.
Because we have to do these things on a continuing basis, given our scale and the ability of us to actually try to be able to buy big if somebody wants to sell big.
Yeah. Naren, just that template, just to again, the idea is to look for not some, and it's interesting because, you've said, well, everything which had to be discovered is discovered in a way. I mean, I know maybe you were exaggerating to make a point, but I think that got the point across. But you're saying, well, within that list of discovered things, you're not looking for undiscovered new things, but well-researched, well-understood, but things which have corrected meaningfully.
Yeah, exactly.
That is the opportunity basket, if one were to draw a circle.
They have to have at least corrected meaningfully on a relative basis. At least one of the two. Either they have collected meaningfully on an absolute basis or meaningfully on a relative basis. Either of the two. And then our research should say that from that point, there is scope for either absolute outperformance or relative outperformance. Yeah. Because that is what investors give us money for.
Yeah. Do you have a watch list of these companies? I mean,
we have a large watch list, actually. We have a large watch list. Each of the fund managers and each of the analysts have a watch list which stretches to 500 to 600 stocks. So on a continuing basis, they are tracking them to see what is possible to be looked at a point of time. And that is something. And that is, I think I would thank all the investors for giving us a lot of unconstrained money. Because if you look at the amount of unconstrained money that we have across a lot of asset allocation kind of strategies and a lot of flexi cap kind of strategies, whether it is value, special situation, flexi cap, those kind of things allow us to actually invest in these things. Whereas if you have money in only constrained strategies, which says, okay, you can invest only in mid cap or only invest in small cap, then it doesn't work as well. And that is the thing, actually.
Got it. I know sectorally, broadly, I know it's not a sectoral kind of market. You've given us the style and what you're working with, and this can come up anywhere. But as we start the new year, you picked out turning points for many sectors in the past. Anything stands out as a basket?
Actually, there is no basket. That's where the interesting thing is, it is not a basket, actually. There is no basket like you could go back in the past and say PSU or metals or something like that. There is no such basket at this point of time. It is actually something which is less than a basket. Of course, I would say many of these quality-oriented sectors are getting more interesting at this point of time, but none of them, if you look at whether it is FMCG, whether it is some of the pharma sector stocks, some of the IT stocks, these are all some of the stocks, which are actually in favor in 2020. Today in 2026, those are the stocks which are looking better at this point of time, because somewhere from 2020 to 26, if you look at them, there are some of the sectors which have done badly. But even them, they are not like what metals used to be or PSU used to be in 2020. There, the absolute valuations were so dirt cheap that you could say I could hold them because the P's were so low or the dividend yields were so high that they were on an absolute basis much cheaper then.
Yeah, so no broad sectoral call in that sense at all.
Yeah, exactly.
There have been opportunities where you have understandably been opportunistic as well, and in that very template where the stocks have corrected, they have been unloved but fairly well researched. Case in point, Asian Paints. This is at the peak of competitive cycle, and the stock having serious underperformance. This was sometime around July, if I remember. The price was quoting at around 2,200 rupees. Thereafter, we saw competitive scenario, the forces slow down a little bit, and the disruptors now become an incumbent. The street believes that maybe the leader will continue its leadership. Are there any other places right now where, they're unloved and you believe that the long-term thesis stays intact? If you could give us some direction on what pockets should one look at? Because you said it's across the board, it's across market capitalizations, it's across, various sectors as well. But if there are some specific instances without naming, if you could give us some sense, maybe the street would have a little more to work with.
I wish I had, otherwise we would call it the best theme to invest in at this point of time. People have asked us in recent past, we have always said asset allocation is the theme. We have always, in recent times, we have said asset allocation, but no longer as positive on gold and silver as we were before. I mean, if we had wanted to say a specific theme, it would be easiest for us to say invest in this theme. But frankly, there is no such theme at this point of time, because the reality is, can you show me a sector which is trading at less than 20 PE and has done badly at this point of time? And you'll find that there is no such theme at this point of time. If you have one such theme, my colleagues in my company would be very happy to research that theme for ideas at this point of time.
Absolutely. Naren, you mentioned precious metals, right? What a year we've had for these commodities. Were you surprised with the move we've seen? You were one of the first to call out this big. The way to go about investing is multi-asset, and you kind of sort of started talking about it a few years ago, and I think it's worked well. But within that, gold and silver is given disproportionate returns. What's the call from here?
When, our framework, you have to remember that we don't have either book value, dividend yield, or cash flows in these products. So when we started liking multi-asset as a theme, it was because of using frameworks like Nifty to gold, Nifty to silver, gold to silver ratios. All those ratios were looking extremely good 2 to 3 years back. Due to that, we actually recommended multi-asset as a theme. Now, given that even today you don't have any way of price to book corporate dividend yield or cash flows in these things, now when we do the same analysis on Nifty to gold or Nifty to silver, none of these things say that you have to put money in gold and silver standalone. In fact, we worry today, if you look at an asset allocation theme, do we like an asset allocation theme including precious metals versus an asset allocation theme excluding precious metals? We think that an asset allocation theme excluding precious metals may be safer at this point of time. But today, the whole world wants to invest in precious metals only as a standalone thing. So then we say, okay, invest in multi-asset. That is much safer than investing in standalone in precious metals at this point.
You're saying that gold and silver no longer, right to paraphrase you, no longer attractive in that sense, right? That's the view.
Because you don't have dividend yield, you don't have earnings, you don't have anything. So on Nifty to gold, Nifty to silver, all these kind of ratios, or even S&P to gold kind of ratios today, they don't appear that attractive. But the fact is that how can you give a top to a thing where there is no valuation engine possible? So that is where we are stuck. That's where we are, and that is why we still like asset allocation. Do we like asset allocation without precious metals over asset allocation with precious metals? We think so. We like asset allocation without precious metals today.
All right.
Now that's where we are today, and we were the most bull on the other side.
No, that's why
everyone wants to invest in precious metal standalone, and we are standing in the way, it looks like.
No. That's why I asked that question, because I remember I think 2-3 years ago, you started talking about multi-asset in a big way. And now, of course, you've reached the other end in that sense. And now you're saying that you'd actually prefer to do multi-asset, but without gold and silver. So that's interesting. Mal?
Now, I just wanted to know if there are any themes which you like which are event-based. So to say that everyone's hoping for some trade resolution that would come by in this year between the India and US, maybe some of the exporters, people looking at markets outside of the US as well for Indian exporters. So whether a deal comes or not, are there any attractive bets on those areas? In those areas, the currency has been favorable for exporters as well.
Clearly, we are more positive on the markets due to that.
Yes.
That part of it is very clear. And we believe that investors can have a higher allocation to equity compared to a year back. But are the exporters cheap? That also is not true. Normally you would have believed with this kind of a problem, exporters would have crashed. That has not happened. So that is why, it is, yes, some of the exporters may be bottom up, some small exporter may have come down. Therefore, there may be an opportunity. But somebody should offer a big block to us for us to be interested. Otherwise, those exporters are not interesting. So that is where we are at this point of time. And so consequently, we are in this period, where we have to do stock picking, we have to do a lot of thinking. But there are no interesting themes except that we are certainly more positive on equity. We believe India will outperform. We do, again, an area where we are not an expert, USAI. We think that it is overvalued. But if you go and tell that we sitting in India can decide how much we know about USAI, whether it is a bubble, whether it is extremely overvalued. We keep talking it is extremely overvalued, but if someone goes and questions us beyond a point, we'll tell them that we don't know as much as you. That is the reality. And but to us, it looks like purely from a framework of extreme performance, we think that USAI stocks look overvalued, but that is what we have. But that is an area where we are a bit worried. But what happens there, we'll have to see. But in our framework, certainly we are worried about that. And we are worried about ripple impact on India also. But we think India is an outperformer in that fall.
Yeah, in that fall, I mean, everything will fall, but maybe outperformer on a relative basis, if that happens, if that correction were to come to pass. The other point, Naren, which has been sort of enduring is the humongous amount of equity supply in 2025, and something you've referred to earlier, over the last 1 year as well. What is it looking like for 26, Naren? And again, if you have done some work in terms of supply as a percentage of, and I think we spoke about this earlier, as a percentage of current outstanding stock and whether it's at historical high levels, just your perspective.
See, we are a free market. So I think when people see that they can get good prices for doing IPOs, why won't they do it? I'm sure many more companies will come in 2026 and do it. And that keeps a lid on the market because at the end of the day, that level of IPO activity will continue in our view, because I think we are giving good valuations to public market in the market. There are very few markets in the world where the IPO market is as active as India. And I think I think it will continue. And it keeps a lid on the market going up, actually, which in a way is good. But on the other hand, there is a responsibility on all of us to actually carefully invest in IPO stocks. And we make that mistake. If we make mistakes, we'll come to know later. But I would say that equity supply will continue. I don't see an end. Yes, January seems light comparatively. But if I take a year, I think there will be many IPOs which will come. And that will continue and keep a lid on the market. And that is the reason why we believe in still moderate returns in the market, because of both higher valuations and a lot of IPOs coming. And I think the IPO market is very buoyant at this point of time. India gives much higher valuations to all kinds of sectors. globally you get valuations only in AI-oriented sectors, whereas here we get valuations in all kinds of sectors. So I think there's a lot of burden on all of us to be more disciplined in the way we invest in IPOs. And that is the challenge that we have as public market investors, because we are investing on behalf of all the public investors.
All right. And do you have a call on broad-based earnings recovery? Do you think 2026 would be that year after especially the kind of stimulus that the government has given, at least on the consumption front?
Definitely, I think earnings will be better than what we have seen. I think the government has done a very good job in 2025 by cutting interest rates, cutting GST, and cutting income tax. I think there is going to be a much better earnings situation in 2026. How much is it already factored into the market is the debate that we have. But I think the earnings situation for 2026 should be better. You should always exclude some of the interest rate areas, because if interest rates come down and due to that some sector earnings come down, you should exclude them and look at earnings. And clearly, I think 2026 should be better.
Well, thanks very much, Naren. Let's hope
Thank
so.
you.
Appreciate you joining us, and really wonderful conversation to set us up for the year. Thank you very much. Well, I think that is one of the largest sort of money managers in the country, S. Naren, with that perspective. 26,175 is where we are at in the Nifty. We're about 45 points higher. But let's get in the first corporate of the day, Mangalam.
Yes, we will get in the first corporate of the day. Before we go there, keep an eye out on ITC as well as, Godfrey Phillips, the tobacco makers. The reason why we're saying that is because it's not usually that we see a 4% downtick on these stocks on a government notification. Godfrey Phillips now down nearly 8%. Yesterday, the Ministry of Finance came out with a notification where, tobacco, ex-BDs, cigarettes, etc., will all be now taxed at 40% GST, and the 28%, which was largely known in September itself, that the 28% slab will go out and make way for the 40% slab. What is not known yet is how much over and above this would there be the health cess that would come by, additional excise duty if needed. And the notification that came in December had very high numbers for those. Those were the highest numbers, but that wasn't the actual number. The street is putting 2 and 2 together and assuming that there would be a big price hike which would be expected, or the tax imposition on tobacco would be a lot higher now that this 40% comes. But, it's just the fear of the street right now. We don't have any clarity on what the actual imposition of the overall tax would be over and above this 40% GST. So just be careful of, Godfrey Phillips and ITC, the kind of moves that those stocks are seeing right now. With that, let's move on to the first corporate on our show. Wockhardt, that's the stock on our radar. European Medicines Agency has granted accelerated assessment to Wockhardt's Zenic or WCK222. So we know it. To discuss this and more, along with the outlook for 2026, Habil F. Khorakiwala, who's the founder and chairman at Wockhardt Group, joins us now. 3 talking points: the EMA's accelerated assessment for Zenic, the outlook for the company's approval for Zenic and the potential market size, and alongside that, the outlook for geographies and products like insulin, etc. as well. Mr. Khorakiwala, thank you so much for joining us on day 1 of the new year. Wish you, your team, your family a very, very happy, and in your case, a healthy 2026 as well. A disease-free one at that. Congratulations on, getting the EMA's approval for accelerated assessment for Zenic. Just wanted to understand what the next steps for this are now when it comes to approval, and by when do you expect this approval from the EMA now that it's been given the accelerated status?
Good morning to you and everyone, and wish you a very, very happy 2026. These EMA, European medical agencies, have informed us that they are going into accelerated approval. And this would mean that we should be getting approval sometime in July, August of this year, because normally they take 5 to 6 months for the approval process. And this is a very big win for us because we were not expecting this early approval from EU agency. And that will put us into the complete 27 countries European market Zenic available.
Right, that would be good, July, August next year would be good, because that is when you expected the US FDA approval to come by as well, right? And do you think maybe because the US FDA had, accepted your NDA or new drug application in December, the EMA took note from that and gave you an early approval?
I personally don't think so, because EU is a very independent agency, and they have taken their own call based on the profile of the molecule and the unmet need in Europe, which is roughly about more than 200,000 patients who are suffering from multi-drug resistance.
So now that you expect the approval to come from the US FDA and the EMA in the middle of this year, how much do you think would be, the market size, the incremental market size? You said that this drug could be a $1 to $2 billion market with 40% coming in from the US. With this approval coming in from the EMA, or the acceleration coming in from the EMA, would there be an incremental revenue potential that you're seeking, and would you want to revise that $1 to $2 billion potential sales size?
We believe that it would be at least $400 to $500 million potential in Europe at the peak of this molecule. And what is equally important, it is meeting very unmet need. And with US and UK approval likely to be during the year, it would be fairly fast track for us to go to other markets in the world.
Right. So overall market size would be still about $2 billion, $1 billion coming in from the US, $400 to $500 million coming in from Europe.
We would stay with that focus because we have factored that into the total forecast.
And when does it start reflecting in your overall revenue? Will it be FY27 or FY28 onwards?
It will be mostly FY28 onwards.
And peak sales hit by when?
It will take us time, and it is like a hockey curve. Hockey stick, because initially to communicate about the molecule, the product, the scientific aspect takes some time before the physician, doctors and hospitals start using the molecule. And once that is done in a reasonable period of 18 months or so, then I think one would see a very sharp increase in the revenue.
You indicated that you'd be looking at other markets for this drug post, US and Europe as well. What's the status on that?
That status, we are keeping our files ready, and depending on the size and the potential of various markets, we would also be making this application in next 3 to 6 months.
Right. And what about the other drugs? You have MICNAF as well. How have sales done in India, and what's the status of that one in the US?
The MICNAF, we would have a fairly good sales in FY26-7, and would be about 80 to 100 crores. And US, we are not going with MICNAF immediately. So we are keeping MICNAF for the time being for India and emerging market. And we expect that we would receive approval in MENA region, that is in Saudi Arabia, early, and some more countries like Latin, Brazil, Mexico. Approval will come in next 12 to 18 months' time.
Right. The last year was remarkable in the GLP-1 sort of category as well. I just wanted to know, how is it that you're planning to participate in the GLP-1 opportunity? And do you have any opportunity manufacturing insulins, given the shift towards GLP-1 drugs? Would there be an impact on that?
First, we don't believe that there will be any negative impact, but that it will continue to grow because diabetes is a very important part of it, and insulin is the core of treating diabetes. However, our strategy in diabetes and obesity is that we will have the entire range of products, other than insulin and glargine, aspart and other newer diabetic products are there. We will, over the period of time, come out with in India and other markets. As far as the anti-obesity drug is concerned, we believe that we would focus initially on diabetic portfolio, and maybe a little later, when there are too many companies are crowding into anti-obesity market, and we expect a very large number of players to be there in India and other countries. So I think we will wait, watch, and enter the market at a later stage with our recombinant technology, because mostly companies are coming with semi-synthetic route.
Right.
And recombinant technology has a much lower cost, maybe 1/5 of the cost of semi-synthetic approach which companies are following. So at the right time, we would enter the market, but not immediately.
All right. Basis all of what we've spoken right now, it's the start of a new year, also a day where we get you a few longer-term macro calls. And I remember, sometime in the middle of the year when we spoke, Mr. Khorakiwala, you told me that in the next 3 years, the vision board for the company includes sales doubling from what the last year's level was and a significant improvement in profitability. If you could, give us a sense on the past 6 months, how the company has progressed along with how the industry has progressed. Do you think that 6,000 crores sales by FY28 with 15 to 20% EBITDA margins is a possibility?
Yeah, we do think that is a definite possibility, mainly because we would have traction available in Zenec, in India, in US, and in Europe also. So that kind of number is definitely possible. And going forward, it will further double in another 2-3 years.
All right. So basically, you're looking at revenues going to about 12,000 crores by FY31.
That is true.
Okay. And would you consider any fundraise in the very near term to fund R&D? Because, you do have about 1,700 crores of debt on your books.
Yeah, we have the debts, but also we have a fairly large amount of cash sitting on our books. And as our EBITDA improves, our cash outflow from operation and research is also coming to near normal. So we do not have immediate plan to raise the equity. For that reason, we are also looking out out-licensing arrangement for Europe, and we are in discussion with number of companies there.
And what's the kind of
companies there? And we would be able to finalize that soon enough.
And what's the kind of funds you would get from this out-licensing opportunity? Have you earmarked a number?
No, we have not earmarked the number at this stage, and it is not prudent for me to give more details at that time when the discussion is on.
But we can hear something soon on this, right? Mr. Khorakiwala?
Yes, I think one would hear something during the year.
And what's your deleveraging plan? You did say that, you have debt on your books, but you are looking to generate some more cash. I'm looking at cash flow from operations. Last year was negative. Cash flow from investing was negative. You had to raise some finances as well. So what's the plan to improve your balance sheet from current levels here on?
We do expect a cash neutral position roughly in FY26, accepting that the research and US operation will be probably slight cash negative. And then onwards, I think we would be in a cash positive position.
All right, take that point. Thanks a lot, Mr. Khorakiwala, for joining in. You've given us some big numbers, you've given us some minute details as well, and you've whetted our appetite for an out-licensing opportunity that would bring in some money for the company. By when, we don't know. How much, we don't know. But soon enough is what you're promising us with cash neutrality in this year, at least in the Indian business. Wish you a very happy 2026 once again.
Thank you very much. Thank you very much.
Right. With that, the market's holding around the 26,200 mark for the frontline index. The Nifty Bank has come off a bit from the highs, but ITC and Godfrey Phillips, both of them have extended their cuts. Now 5% lower for ITC. Godfrey Phillips down nearly double digits. So we'll monitor and get more clarity on this as we move along. And at the bottom of your screen, numbers from M&M. The overall sales actually slightly better than the CNBC-TV18 poll, and that's reflected in the stock price with a move of almost 1.5%. Take a short break, come back to management of Kiri Industries, a stock that was up 20% yesterday, higher today as well. Joins in Manish Kumar Kiri, gets talking to us on the $689 million remission of, towards the company coming in from Dystar.
Welcome back. This is Corporate Radar, and we've got a corporate on our radar. Kiri Industries is the company I'm talking about. So very, very large transaction finally going through, and very positive for the company. Let's just set the news context first, and then we'll go across to the management. Sonal is here to explain. Sonal, tell us.
It's a long pending transaction which has finally come through. To put the news first, the company has finally received, or the amount has been remitted at least, $689 million, which is around 620 crore rupees, towards Kiri Industry for the 37.57% equity stake that they had in Dystar. Now, let's give you some background, because Kiri Industries, long back, they acquired substantial interest in Dystar. This is actually in 2010, which was with Senda Group, this agreement. Although Dystar was making substantial profits, Kiri Industries was not paid enough. And after that, Dystar actually filed for bankruptcy. So Kiri Industries, they went ahead, they initiated proceedings with the High Court of Republic of Singapore, and they were entitled to a certain amount of profits. The numbers will come up for you on the screen. This is what they had indicated earlier, initial stage of this particular case as well. They basically said they should get the higher amount of profits at 271 crore rupees for FY17. They disputed bonus, special incentives, and various fees as well, which Kiri Industries was entitled to. Come 2023, there was some positive news, because Singapore International Commercial Court confirmed the value of Kiri Industry in Dystar. The valuation that time was confirmed at $603.8 million versus the earlier valuation of around $480 million that this court spoke about in 2021. So valuation was increased then, but still there was no money which really came by. In 2025, finally, we got a confirmation. The company got a confirmation of $689 million that the company should be receiving. And December is the month where this money was finally remitted. So this was a long-standing legal battle which continued over years. And finally, the company has been able to receive this money, 620 crore rupees. The question is, how will shareholders be rewarded, whether it will be used in the capex for the company. So yes, some positive news, and that is something that you can see in the stock price as well.
Sonal, thanks very much. Very important context in the background, right? It's long in the making, finally has come through. Thanks again. Well, we have Manish Kumar Kiri, Chairman and Managing Director of Kiri Industries, now joining us. And we'll talk about three things: the Dystar stake sale, use of proceeds, and of course, what's in it for shareholders. We'll talk a little bit about business, underlying business, demand, pricing, etc., as we look into 2026. Mr. Kiri, thank you for joining us. First up, congratulations. As I said, long time coming, and it's finally happened. And Happy New Year to you, everyone in the business, and of course the family. Thank you.
Much. Thank you for having me. First of all, let me just make one correction.
Right.
$689 million translates to 6,200 crore and not 620 crores.
Yes.
So I think there is a correction needed here.
In the graphics, I think. Yeah, we'll do that. We'll do that. Absolutely. So let me start right there. Apologies for that. Let me start right there. So it's the cash is more than the market cap of the company, the current market cap of the company. So naturally, right, I mean, the question which will come through is, are you planning on giving out a special dividend, something for shareholders?
See, this ended almost after 11 years. So we went through a very murky legal battle in Singapore for more than 11 years now. And when this ended, it ended just on the time where the court decided long stop date in the last enforcement order. So the funds would be deployed all within country. This is our exit from international investment. So the board has decided to invest large part of these funds into rising projects in India. Few have already been announced, and some dividend amount would also the board of the company will deliberate and decide in due course. But you will see from us several announcements to deploy funds for the future growth of the company, where we would be able to translate and transform.
Mr. Kiri, allow me. I'm sure you would understand, right? I mean, shareholders who are watching, and some of them have kind of been with you through the journey as well. First of all of the money in India, this is exit from international operations. Yes, could you give us a broad breakup, and we won't hold you to the numbers since this has just happened. How much are you going to invest in business, and what should shareholders expect as a one-time sort of dividend?
See, the majority, I would say, based on the earlier discussion, more than 90% would be deployed into futuristic growth projects in India.
Got it.
How much would be the precise number for the dividend? That would depend on the board to decide, but large chunk of money would be invested for the future
90% will be invested, and
more than that.
More than 90% will be invested in futuristic projects, and the rest perhaps will be paid out. I just to get that number out, what is the sort of net of cash on this transaction? What's the tax outgo, if any, on this?
Yes, we would be subject to capital gain tax.
Got it.
And that would be 12.5%. Post that, we will have more than 5,300 crores left post-tax to deploy.
But then you had legal expenses that you have incurred, etc. as well, right? So, X of all of that, what is the net additional benefit that comes to the company? That's what we want to understand.
Yeah, that would be more than 5,200 crore that will come to the
inclusive of all the expenses, etc. So more than 5,400 crores.
Taxes, expenses, everything that relates to that.
All right. So
5,300 or 54?
5,200 plus.
5,200 plus comes in, and of which 4,500 crores goes into deployment of, for capex, and the other 500-600 crores additional will be distributed among shareholders as a one-time dividend. That's correct, right?
Yes, along the line of that.
Along the lines of that. And
again, the exit number would be announced soon, but along the line of that.
Right. 23% of the promoter shareholding is still pledged. With the dividend that comes in, would the promoters first depledge that as well? We just wanted to understand.
Yes. There was a negative pledge on the promoter shares, not pledge of the promoter shares, to clarify that. But everything would be depledged. There would not be anything pledged.
Okay, and is there any other consideration that is coming to the promoter over and above this 5,200 crore that comes into the company?
Everything comes to the company. There is nothing which flows to promoter at the moment.
All right, and you are completely out of this business from this 37% stake that you subsume. There is nothing else which is left beyond this.
So that's the investment into our international operations. So that would be our exit from our international operations and investment, which relates to dyes and intermediates. So we would be out of that. But the core business, which belongs to India, of Kiri Industries Limited, in the same sector, in the same line, is going to continue.
You said over 90% is going to go into, you said futuristic businesses.
Yeah, the projects, correct. The futuristic projects.
But in the same line of business, you're not looking at new lines of businesses.
No, it would be a new line of businesses. It would not be, it would be diversified investment. If you go through some of the earlier announcements, there were announcements.
Can you quickly outline where will this money go into? I mean,
so there are sectors which are related and unrelated, diversification both. So we decided to put some funds into fertilizer, which is again the need for the country, replacement of our imports. Also the metal sector, in which we'll be investing into copper, which has already been announced earlier. And that would also be replacing the entirely the import into the country. So we'll be investing into import replacement sectors, but not in the line of dyes and intermediate range of specialty chemicals where we are today. So it could be related as well as unrelated diversification both.
Got it. We should put out that 90% number. Over 90% will be invested in futuristic businesses. Anything new? You said fertilizer, metals, which is copper. Import substitution is a theme here. These have all been announced in the past, right?
Yes, you will see our disclosures in the past, correct.
Anything new, which you where
nothing is new at the moment.
And we would what is your internal benchmarking on the return that you're expecting from this 4,600 crore incremental capex that you will do in these new sectors? Because traditionally in your actual core business, if you invested this money, it would have yielded you a little more because of your expertise. But here you're going on to newer segments where you don't have expertise, but there is opportunity. So what's the kind of asset turns, return on capital, or internal, benchmarks that you have for IRR, etc., for this money?
Right. So last 3 years, the company has been working on strengthening its management bandwidth in the other sectors, and we would be embarking on quite significant large projects, and the IRR of the new investments, which internally the board has approved and what we decided would be somewhere more than 30% IRR on those projects in which we are investing currently. A return on equity also we are expecting quite significant. It would all be in the interest of shareholders to have at least 3 to 4 years payback on whatever investments are being made currently.
All right, 3 to 4 years payback on whatever are the investments that are being made currently. You are looking to deploy 90% of the 5,200 crore that you get as net proceeds from this into capex, futuristic businesses, import substitution theme. The rest 10% goes into shareholders.
Mr. Kiri, would you? This has been decided. This allocation, etc. This is under deliberation, which has to be approved by the board, or this is your thought process, which is to be taken to the board.
A part of it has already been decided by the board and announced earlier as well.
No. I'm saying that 90% of the proceeds will be invested in.
That's not. This is just a deliberation. I'm sorry.
Okay.
And the board is going to deliberate, discuss, and then decide in the next few days.
Okay. So it's possible. It's possible for minority shareholders who are watching, because I mean it will be a little, these businesses that you're investing into, that you're thinking of investing into, which will require board approval, and they may do well over a period of time. But those who were expecting for some immediate reward for staying with the company through the years would be, you would understand, disappointed.
Well, I think the feedback that what we are receiving from the investors and the shareholders over a period of last 2-3 years was more optimism to invest into growth areas.
Got it.
And I think that's the willingness of the investors, which and the shareholders, which
but it's possible
was expressed to us.
Yeah, it's possible that when the board meets, you will take this line of thinking to the board and discuss this, right?
And ultimate the board's decision on the deployment.
It's possible you may look at other options on the table
Of
as well.
course.
What we've discussed here today may change. I mean, it's possible.
Right. These are the intentions which I have shared with you, but with the final decision of the board, this may change as well.
Yeah. Foreign institutional investors hold about 22% stake in your company. That number's come down from the past, but have you met any shareholders before meeting the board? Or, you said that you've gotten feelers from them that they want you to invest in, futuristic businesses. Have there been any shareholder interactions lately from major shareholders?
There have been interactions with the shareholders, meetings with certain investors over a period of last almost 4 to 5 years, in fact, since this legal battle was going on. And there was also a regular quarterly participation of several of these investors into investors call that we, that we do every quarter. So these are interactions, and besides that, there were other individual interactions with the shareholders and investors, which also took place over a period of last 2 to 3 years. Correct.
Right. Will this require a shareholder vote as well?
Some of them, yes.
Because this is material, right? I mean, you will need to.
Of course. Yes.
Okay. So this board meeting is in the next few days, you said, right?
Yes.
Within the next 2 weeks, we should see something.
Yes. Within a short time, you will see something.
Okay. All right. Mr. Kiri, we will connect again, hopefully.
Post the board meet.
Post the board meeting, and we will see if there are any changes from what you've said. But I think what you said is important, the last bit, which is this is your thinking. You will have to take it to the board. The board will have to vote on it, and they will have to decide whether this is the course that you're taking. And of course, after that, maybe there's a shareholder approval which is required as well. Thank you for joining us, and once again, wishing you a happy and sort of healthy, prosperous 2026, sir. Thank you.
Same to you, all of you. Happy New Year. Thank you for having me.
Thanks very much. Well, I think look at the stock which has come off. I mean, the intraday should come up on your screen. There's from the highs, it's come off and we're up about 0.3 odd percent. And at one point, about a 4-5% pop after yesterday's massive 18% move. So the headline basically is that 5,300 crores, plus minus, is the amount of cash net of tax and legal expenses which comes into the company. And over 90% as of now is the thinking that over 90% of this amount essentially is going to be invested into newer businesses, not legacy businesses of dyes, etc., but newer businesses like, copper and fertilizers and so on and so forth. But all of this will have to be approved by the board, which should happen in the next 10 days or so. So that's the headline from Kiri Markets, of course, taking the stock a notch lower. Mangalam, the other bit, I think, which you've been highlighting, of course, is what's happening with ITC, Godfrey, and what's the market's thinking and what's happening here?
Well, the market's thinking is the worst case scenario. Basically, what had happened was that the government, after it announced the GST 2.0, they said that for all these so-called sin goods, X of BD, all the tobacco products, etc., they will move into a 40% tax bracket, the GST bracket, and the 28% plus NCCD, basic excise duty, and the additional excise duty that these companies pay will be subsumed into this 40%, and overall there will be some additional duty that will come by as well. Now, yesterday there has been a notification from the Finance Ministry that this GST of 40% on tobacco, cigarettes, ex-BDs, effective from February 1, 2026 will take place, and come February 1, 2026, this 28% will be subsumed and exhausted. But what needs to be known is what are the additional duty and cess implementations that will happen, and what would the total tax incidence post this implementation be. Remember, in December, there was this meeting that took place where the cabinet did approve a couple of upper limits for the excise duty, and those upper limits were obviously a lot higher than what the current tax imposition is. So the street is putting 2 and 2 together. They're taking this 40% and that upper limit and assuming that there would be a very, very big jump in taxation for tobacco, and that's what the fear is. But we don't know still what the actual tax post this 40% would be and whether that would be tax neutral or not. If the tax imposition on the whole, and once the actual clarification or clarity is out on that, if it's less than 5 to 10%, then it's actually a positive. If it's more than that, then it's a negative, a big negative for all these guys, because they might not be able to take those price hikes. And even if they do take those price hikes, would that result in additional revenue? Perhaps not for the government, because, then you would have the increased, contraband or the illegal industry that would come by in the tobacco space. The street is fearing the worst right now, which is why these stocks are lower as of now.
Well, interesting, sharp move, right? I mean, 6%.
Yep. 6% on ITC is not a usual thing.
At all. That's the cigarette names, tobacco names for you. Somal Mehta is with us, head of alternate research, capital market strategy at Mirae Asset Sher Khan. Somal, good morning. Happy New Year. Thanks very much for joining us. Just your thoughts, Somal, on markets from here. Been in a bit of a range, just knocking around all-time highs, but no conclusive moves in that sense. You'll have to unmute yourself, Somal.
Happy New Year, Prashant. Good morning to everyone. Happy New Year to everyone. Yes, absolutely. It's been very range-bound, knocking the doors at the all-time highs. But I think the undertone still remains positive. We're still making high tops, high bottom on weekly, monthly charts. We have a very, very crucial resistance around 26,200, 26,300 levels in the very short term. But I'll be expecting this range to break on the upside. We had the same situation just a couple of months back, where we were having a range around 25,000, and now we have a range around 26,000. So I'm not surprised. It's a slow move for the markets, but I'll be expecting a new highs very soon. And in fact, even above that, 26,700, 26,800 would be my targets in the short to medium term outlook. And the crucial levels, yes, of course, 25,700 remains now the most crucial level in the very short term.
All right. The markets come off the highs. 25,700 is an important support that has come by. Godfrey Phillips now down 10%, ITC 6%. We're seeing some decline in some other names in the broader market as well. Equitas, for one, is lower. We're seeing a decline in Nuvama Wealth, which is down almost 1.5% as well. So, Amil, individual stocks, you've have you enlisted some for us?
Absolutely. The first one I've listed is Motherson. Motherson has been in the uptrend, already high top, high bottom, trading above the short-term averages. Great setup. A small triangle pattern has broken on the upside today, and I'll be expecting the stock to continue the uptrend. Stop loss would be 118, and the target would be 128. The next one is Ultratech Cement. I'll be expecting a reversal here. It has come has cut above the 200 daily moving average today, and I'll be expecting a great, short-term, medium-term, both reversal here for Ultratech Cement. Stop loss would be around 11,650, and target would be 12,450.
All right, Somil, thanks a lot for that. With that, we take a short break, come back on the other side. Manisha Gupta joins in with all things commodities. Stay with us. The markets come considerably off the highs. The Nifty is now moved into the red, just marginally so, but led lower by a lot of the large weight stocks, which are down 6%, as we can see at the bottom of your screen. But let's shift focus to the commodity space. Manisha focuses on gold. Manisha.
Well, thank you so much for that. What is another commodity or an asset class which made record highs 52 times in 2025? Well, that was gold. Sparkle shone throughout the year, and we've seen the best year since 1979 and the best year in the last 5 years as well, as you can see. So 65% of gains is what we've done. An all-time high for gold has been $45-50 an ounce. We closed 2025 around $43.20 or thereabouts. Profit taking came in, and this is after CME hiked margins by nearly 9% in case of gold. The kind of volatility that we started to see in case of many of these precious metals and commodities in the last or the second half of December really got CME to do that. So 9% of margin is what we have starting today in case of gold. Silver starts a margin of 30% starting today, while platinum and palladium have margins of 22 to 25% starting today if you were to trade on COMEX in CME there. So that is what has led to markets slightly jittery, and that went into profit taking as well. This is what we've done in sense of gold prices in the Indian markets then. Last year, the closing came at around 76,000. This year, we've seen an all-time high of 1,40,000. Currently, the gold prices are trading at around 1,34,000, 35,000 thereabout. So some profit taking is what we've seen from the peaks in case of gold for the Indian markets as well. Interestingly, what is gold looking like in 2026? Well, most of the banks and brokerages believe that the central bank buying will continue, the US Fed will cut interest rates, the global debt is an issue, and so is the case with the geopolitical tensions, and that would be supportive for gold. We've already done $45, $50 an ounce, and 5,000 really seems to be a synonymous number coming in from various global banks and brokerages. So UBS, Bank of America, and then you have HSBC as well, talking about $5,000 an ounce. And it doesn't end there clearly. Society General, Metal Focus, Eddie Ardeni also have spoken about $5,000 an ounce of a possibility for the gold prices in 2026. JP Morgan talks about 5,055, possibility of a 6,000 as well, but talks about a correction on the lower side in case of gold, because we haven't seen a correction in gold in all of 2025. Goldman Sachs talks about 4,900 on the higher side. Citi talks about a big range going forward. 5,000 they say is a possibility, but a correction in case of gold prices can also bring it to a support of 3,800 on the lower side. Well, on the not so bullish side is Standard Chartered talking about 4,750, but that would be an all-time high as well. Deutsche Bank talks about 4,000 of an average in the next year, while you have CPM Group talking about 4,500 of an average in 2026 therein. Brokerages in the Indian markets then are looking at those calculations, because remember, we import all of the gold that we use. 800 tons on an annual basis is what India imports. For the Indian markets, we are trading at 1,35,000. Belief from brokerages in India is that you could be looking at a correction almost up to 1,15,000, but 1,75,000 of an all-time high is something that you have Kotak, Nirmal Bang, even for that matter, Anand Rathi talking about. So that is the range that the gold prices could be trading in this year, 2026.
All right, Manisha, thanks very much for that. So, some look back at the past, but more importantly, a look into what forecasts are looking like across for commodities into 2026. Manisha, thanks very much for that. We take a quick commercial break here. We'll come back with some excerpts of our conversation with Baba Kalyani of Bharat Forge and the recent order wins. Stay tuned, coming up. Welcome back. Markets, though, have given up pretty much all the gains. I think we slipped into the red even, but now about 8-point change higher, 26,140. As promised, we want to play out that conversation with Bharat Forge's Baba Kalyani. My colleague Parikshit spoke with him on, of course, orders from the Indian Army, which has come Bharat Forge's way. But, of course, also, more importantly, their technological partnership with the DRDO and the defense establishment. Listen in.
We have 60% of this contract because the L1 gets 60%. We were L1, so 60% of that quantity will come to us. We are quite ready, and we are very hopeful that once we productionize this, which will happen in the next 4 or 5 months, we will also create capability to start looking at international markets for these products. So I think this story will continue with, like it is happening with our other defense forces, where we've been able to export artillery guns. We will hopefully be able to export small arms in a big way moving forward.
Right. Could you give us a sense of how you are preparing to deliver on this order, the kind of investments that have gone in, and the kind of collaboration, if you can give us some more color on the partnership with DRDO on this?
Well, DRDO's arm that is involved in designing and developing small arms is in Pune. It's called ARD, Armament Research Development Establishment. So our people have had a very close relationship with them as we were developing this product, which was designed by ARD. And so all the internal firing trials, making sure that components are exactly made the way the designers have thought about, and they're interchangeable. The most important thing here is components are all interchangeable, and that creates a huge capability and huge advantage for the user, the Indian Army, that they don't have to worry about if something happens to one gun, can they replace the part with another part. So all that is kind of taken care of. We don't have any external collaborations here. It's all internal. This gun, right from the raw material to the finished product, is all made in our plant. We have set up a special plant for this in Jejuri. It's a plant that has got a capacity to produce about 50,000 to 60,000 weapons per year. But easily, it's a modular plant. It can easily be doubled, tripled, based on the requirements that are there.
Right. Would you be expecting more such orders from the government in 2026? Are there certain kinds of weapon systems you're hoping to participate in?
Yeah, we are participating in a couple of more programs, again with ARD and DRDO, which they are designing. And hopefully, some of those programs might come up in 2026 or maybe 2027. I don't know. Depends on the process of firing trials and everything else that needs to be done for them. But yeah, we are quite sure that there will be other programs. But we are also beginning to see in the last couple of weeks a lot of interest from companies abroad in terms of wanting us to produce weapons for them here. So that's another thing we are beginning to see. And those quantities may be even bigger than the quantities that we are looking at for the Indian Army.
All right. Could you give us a sense of what are some of the weapon systems for which you're getting a lot of orders and inquiries for? And are there certain export orders which are likely to firm up and get announced in the next few weeks and months?
No, we don't have any export orders yet, but we are certainly talking to, I would say 2 or 3 companies, large companies, who want to move their production out of Europe into India. And as you know, Europe now has to produce a lot more than what they have been producing.